On January 1, 2026, China's Ministry of Commerce fully implemented a new export licensing system for refined silver, requiring all exporters to obtain government-issued licenses and limiting authorization to companies that meet rigorous criteria including annual production capacity exceeding 80 metric tons and access to substantial credit lines of around $30 million. This system authorized precisely 44 companies to conduct silver exports during the 2026 to 2027 period, effectively consolidating export activity among larger state-aligned entities and replacing the previous quota-based approach. The measures align silver with the same administrative controls applied to strategic materials such as tungsten, antimony, and rare earth elements, elevating its status from a standard industrial commodity to one subject to heightened national oversight. China refines and processes between 60 and 70% of globally traded silver, with customs data indicating exports exceeding 600 metric tons in the first 11 months of 2025, while imports stood at approximately 220 metric tons over the same timeframe. This licensing framework introduces greater administrative discretion over export volumes, reflecting priorities for domestic resource retention and support for internal manufacturing expansion. The global silver market has recorded structural deficits for 5 consecutive years entering 2026, with total annual demand surpassing the combined output from primary mining and secondary recycling. Reports from the Silver Institute and Metals Focus Project continued shortfalls in 2026, with estimates varying from 63 million to over 200 million ounces depending on the extent of Chinese export reductions and recycling contributions. Registered inventories on the COMEX have fallen by more than 70% since 2020, reaching critically low levels around 128 million ounces for registered stocks by late 2025, while eligible stocks provide a larger but still constrained buffer near 321 million ounces. LBMA vault holdings in London stood at approximately 27,187 tons by November 2025, showing periodic inflows but overall trends of depletion tied to physical withdrawals. Spot silver prices began 2026 trading around $71 to $74 per troy ounce after retreating from record highs above $80 reached in late 2025, reflecting annual gains exceeding 140% amid these supply pressures. Industrial consumption represents over 50% of total silver demand, driven by the metal's unmatched electrical conductivity of 6.3 times 10 to the 7th Siemens per meter and superior thermal properties that make alternatives inadequate for high-precision applications. In the photovoltaic sector, modern solar panels incorporate between 15 and 25 grams of silver per unit in conductive pastes and bus bars, with global installations in 2025 driving demand to record levels as renewable capacity additions exceeded prior annual records. The International Energy Agency documents cumulative solar deployments requiring hundreds of millions of ounces annually, with thrifting efforts reducing per-panel usage but insufficient to offset volume growth. Electric vehicles integrate 25 to 50 grams of silver per vehicle in electrical contacts, battery management systems, sensors, and power electronics, compared to 15 to 28 grams in conventional vehicles. Global EV sales rose by over 20% in 2025, supported by expanding charging networks and policy frameworks in key markets. The United States formally added silver to its list of critical minerals in November 2025 through the U.S. Geological Survey's updated designation, recognizing its indispensable role in economic resilience and national security supply chains. Domestic uses encompass semiconductors for artificial intelligence processors and data centers, telecommunications infrastructure requiring reliable signal transmission, medical imaging systems incorporating silver in X-ray detectors and MRI components for enhanced precision, and defense applications including guidance systems, radar electronics, and electronic warfare equipment. U.S. fabricators maintain access to physical delivery through transparent exchange mechanisms, sustaining procurement even as international refined flows undergo administrative adjustments. Vault data from major exchanges illustrate these reallocations. COMEX registered and eligible stocks ended 2025 at multi-year lows following sharp draws, with open interest for early 2026 contracts remaining elevated relative to historical minor months. LBMA holdings experienced significant monthly inflows in late 2025, including additions equivalent to over 50 million ounces in certain periods, yet net trends point to sustained offtake by end users. Macroeconomic linkages tie silver turnover velocity to U.S. national debt expansion and inflation rates persisting above target thresholds, prompting increased allocation to tangible assets as portfolio hedges. Geopolitical trade dynamics and national mining policies in producer nations further influence routing of refined material. Primary silver mining occurs predominantly as a byproduct of base metal extraction in countries including Mexico, Peru, and China, with global output stabilizing near 835 million ounces annually in recent years due to maturing deposits and limited greenfield development. Recycling contributes 180 to 200 million ounces per year, primarily from industrial catalysts, jewelry, and electronics, but recovery rates remain low for dispersed applications like solar and EVs, where silver is consumed irreversibly. Defense sector integration embeds silver in advanced munitions, avionics, and secure communications hardware meeting U.S. procurement specifications. Rapid growth in data center capacity for cloud computing and artificial intelligence training amplifies electrical infrastructure requirements, with power demand projections indicating substantial increases by mid-decade. Medical equipment manufacturers rely on silver's properties for diagnostic accuracy in high-resolution imaging devices. The intersection of licensed export controls in the dominant refining jurisdiction and multi-year escalation in technology-driven consumption establishes persistent equilibrium pressures. Official customs statistics, exchange vault reports, and sectoral consumption surveys supply verifiable indicators monitoring these shifts. Chinese primary production contributes around 3,300 metric tons annually, comprising roughly 13% of world mine supply, though refining capacity amplifies control over finished product availability. Historical export volumes have supplemented international markets, but the 2026 to 2027 licensing period introduces approval-dependent variability. Solar capacity targets across major economies, reinforced by U.S. incentives and global commitments, maintain photovoltaic silver requirements at elevated trajectories. Electric vehicle market penetration forecasts compound annual growth near 20% in leading regions, elevating automotive offtake accordingly. Semiconductor foundries depend on silver for interconnects and packaging in high-performance chips, supporting AI acceleration and 5G/6G networks experiencing deployment surges. Healthcare applications utilize silver in antimicrobial coatings and conductive elements for wearable monitors and implantable devices. Transparent mechanisms on COMEX and LBMA provide daily and monthly metrics on stock positions, warrant transfers, and delivery volumes, while national trade databases track bilateral flows. These systems facilitate allocation of existing metal to fabrication, investment holdings, and strategic stockpiles. Administrative oversight of refined exports coincides with independent sectoral demand expansions, generating observable impacts on global inventories and pricing differentials. Verified data from institutional repositories and governmental agencies chronicle the ongoing evolution of these processes throughout 2026.